Hey everybody, it is June 2022 and welcome to our monthly edition of Momi's Monthly Mortgage Moment. And great timing getting with you, having you on here this week, Momi, because certainly the mortgage market, interest rates, it's in the news quite a bit here this week. So how's your week?
In the news. Yes.
How's your week been then?
It's been a little bit topsy-turvy with the volatile markets. You know, it's been crazy. Up and down, just like the market.
I'm sure. So how are you doing? Like, how are you managing locking people and how are you dealing with all of that?
Well, you know, I subscribe to a couple different services that talk about whether we should float, we should lock. So I kind of listen to that. But I mean, let's just get right down to it. You know, Friday rates were pretty decent, right? Didn't lock the pipe.
Mm-hmm.
And Monday came and everybody saw what the stock market did. I mean, I don't even know what it ended up. It was down.
Yeah.
And we lost everything between Friday and Monday. And so, I mean, just as an example, one of my purchase loans was probably in the sixes when I could have locked it on Friday. And by Monday, it had gone into the sevens.
Yeah, well, that's a big jump in a short period of time. And just anybody who's watching this, depending on when you're watching it, we're talking about Friday, June 10th, Monday, June 13th. Today's, right. When we're doing this, it's Thursday, June 16th. So, yeah.
Right. Yeah. And so in answer to your question, my commentary and my advice to everybody in my pipeline was, hey, the feds are going to raise the rates on Wednesday. And when the feds typically raise the mortgage rates, as the media reports it, the mortgage rates, so the media reports it as affecting long-term mortgage rates, right. Which it doesn't. We've had this conversation before on one of our, recordings. When the feds raise the rates, it typically has the opposite effect on our market. The long-term mortgage rates typically end up going down or recovering from what had happened. And so that's exactly what happened. Monday, the 13th, Tuesday, the 14th were really volatile days in the bond market, which is where mortgage rates come from. And by Wednesday, when the feds raised their rate, we had basically recouped all of our losses and the rates ended up being almost the same as what they were on Friday. So lock away, right?
So Friday, they were lower, Monday way up, Tuesday way back down. Yeah.
No, Tuesday way up still.
Oh, Tuesday way up. I'm sorry. Gotcha.
Wednesday, the feds, raised the Fed rate 75 basis points and rates pretty much recouped back to what they were on Friday.
Okay. Yesterday, Wednesday.
Yeah, yesterday, Wednesday, which was the 15th.
Okay.
So today being the 16th, I'm thinking we're still going to have a little bit of a good ride, right? I woke up this morning, saw the stock market, panicked, jumped out of bed, turned on my computer, and our market is still having a tough time.
Yeah.
You would think not, but my comment on that is, inflation is now, I say global, but the title, really, you could say inflation around the world, right? Like it really truly is a small world at this point. So all the European markets, the Asian markets, they're all scrambling now to head off their inflation as well.
Yeah, inflation's happening everywhere. And inflation is something that we've been talking about for a year plus, over a year. And yeah, we're past the even conversation about it being transitory. I mean, everybody knows it's not transitory. So, and I think you and I agree. I think we talked about it a little bit before we got on here, is that what they're doing now, I mean, they're raising the Fed rate very quickly, and it's kind of knee jerk because they really, they probably should have been doing a little bit more gradual, but starting it way back last year at some point.
Agreed.
Yeah.
But
they talked about doing it, and then they weren't as aggressive. I don't even want to use the word aggressive. I mean, they really didn't do what they were intending to do a couple of times.
Right. Well, I mean, because they believed inflation was transitory. Right. And I'm thinking that we still haven't peaked.
With inflation.
Yeah, it's, what is
Yeah.
it, 8.6?
8.6, yeah. Yeah.
8.6. Did we talk about this the last time, or did I tell you this story that, a friend of mine was at the gas station? Did I tell you the gas station story?
I'm not sure. I don't
Friend
think
of mine was
so.
at the gas station. There was a guy, on the ladder on the numbers, where the numbers are.
Right.
And he was taking down the numbers and adding a place point in front of the 6.
Yeah.
So my friend said, "What's going on? What are you doing? I don't understand." Oh no, we're adding a place point in
He's
front of
prepping for 10. He's prepping for when it hits 10 a gallon.
It's already hit 10. In
Yeah.
Montecito, it was at $10 at one of the gas stations.
Yeah, that one gas station up there that's always really expensive. Yeah.
Really expensive, but people
Yeah.
buy their gas there still, apparently.
Yeah. Yeah.
So
I thought you were going to tell me that they gave the price sign guy like a permanent little perch up there.
Oh God, please no. I mean, I don't even know that I've ever seen $10 a gallon. Even back in the 70s when there were long lines for gas,
Yeah.
I remember being little and sitting in the car, and I don't think they were $10 then.
No, well, I mean, with inflation going backwards that way, even the prices then, as crazy as they probably were for the time, if we looked at, I don't know what they would have been in 1970.
I don't remember.
Your year, but lower than now. But that illustrates inflation. But yeah, I mean, the fuel prices, gas prices are out of control. Food prices are just spiraling, and yeah.
I mean,
So.
it's all, and Social Security, I think, just announced yesterday or a couple days ago that they may, it's not a given, it's not guaranteed, that they're, I think about the senior citizens, everybody on a fixed income, right, where they get Social Security. Well, Social Security is saying they're going to raise, they're going to increase Social Security by 8% at the end of this year, right? So when you get your statement for January 2023, oh my goodness, it's hard to say that, there'll be an 8% increase, but that still doesn't outpace inflation.
Right.
At all.
Yeah.
Or it won't. In the meantime, what do those people do? Now earlier you talked about the feds being aggressive, or maybe not being aggressive, or they should have done it over time. The hike that they did yesterday was the most aggressive that they've done in, I don't know, what is it, like 38 years or something like that.
Yeah.
They've never raised it that much. So yeah, it's like you said, it's a knee-jerk reaction. I think they are going to get even more aggressive through the end of the year.
Yeah.
Which, fingers crossed, will have the same effect as it did yesterday on long-term mortgage rates. In other words, they may start to come down. Fingers crossed.
Okay,
Didn't I admit that a couple recordings ago?
Fingers crossed on that. Yeah. So.
Well, I mean, because rates, you and I have talked about it, rates going up eats into purchasing power, right?
Oh, for sure. Yeah.
Yeah. So people that you and I have had approved or pre-approved, I have to rework that loan. Obviously refis are down, except for people that have to refinance if it's court ordered or whatever because of a divorce or something like that, which I'm doing quite a few of those.
Yeah. Okay.
Yeah.
So, yeah, we had an offer on one of my listings this week where the offer came over in the morning, and by the end of the day, they had withdrawn the offer just because of what interest rates did that day.
Well, I'm sorry to hear that, but it doesn't mean that they had to lock it that day.
No, I think it's just probably a buyer that was skittish. Like
I understand.
This kind of situation does not, create a lot of confidence amongst people. So
I don't think there's a lot of confidence right now in what the economy is doing, or in, the consumer confidence, right, is what you're talking about, has certainly dipped. I mean, I have a couple buyers that one of their trusted professionals, not the realtor, not the lender, somebody in the financial industry has basically told them it's not worth it to buy. And I kind of disagree on that, because real estate in Orange County is still expected to appreciate in value. It might not be double digits this year, but even if it's 9%, you buy $1 million home this year, even with rates where they are, by the end of the year, you'll recognize, 7, 8, or 9% appreciation. What are you going to recognize on that $1 million purchase? It's still going to be worth it. Is your investment, or are your investments, or is your portfolio outpacing what the value that you can make on a real estate or on home?
Right.
I don't think it is. In fact, people are losing.
Right. In the stock market for sure. Yeah. Well, I would, yeah. I mean, I definitely don't think you should really have cash on the sideline. Like if you have cash in the bank right now, you're essentially means you're losing 8.5% on it over the course of the year.
Correct. Whereas if you could put it into a home as a down payment, you're going to be gaining 7, 8, or 9% over the year.
So we also had Stephen Thomas of Orange County Housing report in a couple weeks ago, and I think I tend to agree with him where I think our appreciation, or let's call it appreciation, is going to slow down. I could even see it dropping below the inflation rate, but not going negative, so 5%, 6%, something like that. Mm-hmm. So I could see that, because I do see, on my end of things, I am seeing the market, the real estate market, change a little bit as far as buyers, just the temperature of buyers and the temperature of the market. So, but I don't see it going backwards when we're having 8.5% inflation. So
I don't, you mean backwards, meaning like negative?
Right. Like values, because I still think declining? There's people out there that think like, oh, well, prices are going to like, houses are too expensive. Prices are going to come down. So.
Or that we're in a bubble.
Correct. Yeah. Same thing.
Yeah. I don't see that. I don't think you see that. I agree with you. I really don't. I didn't read that report. I read Gary Schilling's report, not in its entirety because it's long and it's going to take me a few days to digest the information. But, I do see a little bit of a slowdown. Obviously, I'm on the lending side of it. You're on the, listing and buying side of it. I do see homes staying on the market longer. I do see homes go pending in a day and then literally in 2 or 3 days, and I don't know why, come back on the market.
Yeah.
A buyer was looking at several different properties and put several different offers. I mean, I don't know why that happens. Maybe there was something wrong, who knows, but I see more and more of that. I do see price decreases, but I don't foresee that we're going to see a decline in value, like declining values like we did in 07 and 08.
No. Correct. Yeah.
I don't see that.
Yeah. So,
but inflation is going to be the big cloud over all of that, right?
Yeah, we'll see. But inflation, what it means is, the price of things are going up, and right now it's going up at 8.5%, almost 9%. So the cost, rent, everything is going up at such a high rate. As far as buying your own house, you're really you're locking in your housing cost in the long term. So, but anyway, that's a whole separate conversation. We've talked about that. I really wanted to get on here and talk about like what's happening right now with interest rates, which I think we've covered pretty well. So, so anyway.
So the bottom line, Mike, is between Friday and now, they're kind of right back where they were last week.
Mm-hmm.
For today.
Right. For right now.
Change all the time.
Yeah. But okay. So when you're watching this, if it's a couple of days from now or a couple of weeks from now, so you want to get the most updated scoop, reach out to Momi. Give her a call, send her a note. She'll be happy to hear from you and talk to you. So
send me a smoke signal.
Yes.
I'll answer.
Yeah. So, okay, well, we will, I guess we'll see you back here next month as we get into the midsummer in July.
Yeah, we'll see what happens, right?
We will see. We'll see. So, okay. Well, thanks, Momi. Good talking to you. Good having you on here. And we'll see everybody next month. Take care.
Thanks, Mike.
All right. Thanks. Bye.